Hello everyone, and welcome to the Vena demonstration for banks and credit unions. Vena is a cloud-based application that supports banks and credit unions of various sizes in various areas. We want to support you as you make your key decisions in this agile environment. Let's jump into the application to see how Vena could support you in that key decision making. As mentioned, Vena is a cloud-based application. Each team member will have their own unique login based on different roles and permissions, and that's what each team member will see upon logging into Vena. They might be a contributor, a manager, an admin perspective. All the while, you're able to track and manage the inputs and the reporting aspects around your decision-making for your respective bank and credit union. Logging into Vena, each team member will see their respective to-do items in a nice prioritized way, with overdue items at the top if that's part of their workflow, active to-do items in the middle, and view-only reports and reporting packages at the bottom. Today we're going to start with an overall KPI dashboard that can be altered or configured to meet your specific KPIs or related areas that you're looking to track and report on. Within Vena, our user interface is Excel, native Excel, that really eliminates the learning curve for your branch managers and department heads, as every individual in the finance and accounting world has some level of familiarity and comfort with Excel. However, sitting behind Excel is the Vena application, which supports that security and control that you're looking to obtain in a solution like Vena. Upon coming into any template or report, those permissions and securities that I mentioned earlier will be applied based on each team member. You might take a look at historics or more future planning for that long-term 3 or 5 year growth plan. You can use Vena across various periods and then different areas of the business like banking, internal audit, treasury, or any other respective department. Taking that department aspect a level further, a lot of our banks and credit unions will use this across their various branches and for further analysis as they look to expand and open up future branches and acquisitions might occur. Let's focus on the central branch for today. Tell Vena that that's the data we're looking to work within and have everything dynamically update to reflect that choice. Now that we're in our retail banking dashboard, as mentioned, this can be configured to your specific ratios or key KPIs you're looking to analyze and make your decisions based upon. In our example here, the out-of-the-box template allows you to visualize how your world is doing, not only in the current state, but also looking at your past historics, especially as the economy has been fluctuating quite a bit and we're forced to make these tough decisions. And as we look more forward thinking, future thinking with different scenarios, like your best case, worst case scenario. Our net interest margin can be compared against different benchmarks. This could be across industry averages, across your bank or credit union as a whole, or based on different benchmark targets that you define yourself. Now we can see how we're trending in the upcoming months, especially as, again, our world is continuously evolving and changing before our eyes. You might track different areas like your product margin, your assets and liabilities in terms of your interest earning assets or interest bearing liabilities broken out by product and across various periods. You might have your ROA and ROE, understanding that for credit unions, a lot of us aren't doing the ROE. So again, this can be configured to meet your specific needs, but you have those different scenarios you can compare against for that snapshot of your health of the business. In perspective to ratios, we have different ratios different clients like to track against. In our example here, we're looking at a monthly view or a periodic view. I've seen clients do it by quarter or even an annual perspective, just giving them that visibility into once more that health of the business. We're going to keep this open, go into our net interest margin template to do some adjustments and see how our template dynamically updates as we make different changes in our NIMs. With our net interest margin template, permissions once more will be applied by team members. So most of our clients will have the permissions set by branch. So branch managers would be the ones coming in and making inputs relating to what they see and hear about their specific location. Coming in, you have your choice options once more. It'll all be locked down for specific teams, but this just highlights that Vena is diverse and dynamic enough so that you're not recreating the wheel every time a new branch opens. You can leverage the same templates and reports as your company continues to grow and expand. We're going to stay focusing in on that central branch for today. Tell Vena that this is the data we'd like to work within, and everything will dynamically update to reflect that choice option. Many of our clients and customers will bring in these baseline and interest rates from either an existing system, if they already have that in place, maybe a source system. Alternatively, these can be centrally planned by the Office of Finance or even in a treasury team. We have the baseline rates broken out by period, historical rates available for us to analyze too, but then ultimately we're defining for Vena for each of these rates what product those will be tagged to so that Vena knows what calculations and what rates to apply for the respective products. Coming into our planning on the interest earning asset side and also the bearing liability side, we have different planning approaches that are being applied. On the asset side, we're looking by product, almost like a movement schedule. So looking at the movement across your product's activities with contractual maturities, prepayments, even charge-offs. A lot of our clients will bring that information in from your ALM and then build on that with volume adjustments or top-level adjustments like in our monthly other to make different changes to the product for planning purposes. Just like we saw in our retail dashboard, you can apply these changes not only for the existing year for your forecast, but also look more future planning into long-term planning initiatives as we go into maybe that 2, 3, 5-year growth plan across different budget scenarios later on and throughout future years. As Vena is in native Excel, all your knowledge that you have with Excel today can be applied, including copying, paste, and dragging down different areas of your planning, making it very easy for your branch managers to focus on the areas of need and adjustment for those accurate forecasts and budgets. We will now calculate out the average across each of those product categories for those different loans and assets, and then layer on an aspect of adjustment. Just like we've been seeing in the economy, there's a lot of adjustments and movements going around. So when we're doing our planning to get that most accurate view of how our products will stack up come the end of the year, it's important to layer on different adjustments. So in this section, this is where you can make and outline what those adjustments are. It could be for one period if you have a promotion, or it could be across multiple months or periods as you look to smooth out maybe those interest rates over the upcoming periods. Taking those different adjustments, we can apply them to specific products that requires that adjustment to be included. Another area that Vena supports is that for each of our products, you can further define what your interest calculation will be, just increasing the accuracy once more of our net interest margin by product. This gives you the total interest income by product, applying those different adjustments. If your bank or credit union takes advantage or completes FTP, so your funding charge or funding credit, that's where we can layer that on with different rates that could be coming from an ALM or an external system, maybe even your core system if it's being applied there. But this is again where you're layering on those different adjustments for planning purposes to calculate out on our asset side the funding charge and on the interest-bearing liability side your funding credit. This gives you your net interest margin by product across the upcoming periods. Remember, not only for the current year for your forecast, but also long-term over the 2, 3, 5 years that you're doing your growth planning. A similar approach is taken for our interest-bearing liabilities. So instead of doing more of a movement schedule relating to each of our individual products, we now have more of a growth factor method. So this is where, as we see rates, volumes decreasing, let's say, across just interest for our different customers, we might need to increase our growth factor for demand deposits for the upcoming periods. Applied to this is going to be a similar layout to what we saw before, so adjusting those different baseline and rates. So in our example here, you'll notice that we have some low rates. This could be for your, let's say your demand deposits, where we want this to be closer to no interest being charged on the product. But taking that a step further for adding in those promotions like I was mentioning, we might have a promotion specifically for our CDs and we can apply that in. Just before I do want to highlight how this list is dynamic. So once we add in an additional item, like a CD promotion perhaps, maybe we'll just call that CD promo, that's now going to be available as a choice when we come into our dynamic list, and we can apply those adjustments by product just like we saw before to now have that updated calculation for each of our different products. That gives us our calculation, our interest expense by product for each of the upcoming periods. And then layering on that last component of FTP once more, we can see the breakdown. We can make our adjustments as needed to give us our total net interest margin, so our NIMs by product now on the liability side. I just want to circle back to how this is configurable for your bank and your credit union. So of course, we're looking at an example here where we're looking at deposits. That's more for our banks. For our credit unions out there, these would be your shares that are being applied. We're now going to save this data to the system so that everything will dynamically update. Your dashboards, your financial statements, anywhere that's leveraging or applying this data will update. So you're eliminating that manual cut, copy, paste and bringing it all together on your own. This is tied to the workflow. If we're happy, we can move it forward in the workflow. Maybe we want to do some work later, so I'm not going to do that. But coming back into our dashboard, everything once more will dynamically update. So we'll see a jump in our ROA and our ROE based on our adjustments that we made in our NIMs. We can now compare this updated forecast to some of those benchmarks that we were talking through before. But dynamically, everything's updating. You don't have to come in, make manual adjustments like I mentioned with that cut, copy, paste. We see our updated margin, product margin by product on the assets and liability sides for the latter half of the year for our forecast. And ultimately for our existing current year forecast and plan, we're now quite a bit higher than our benchmark for a more optimistic view. Vena looks forward to hearing from you as you start to explore Vena further with the banks and credit union solutions. Please reach out to us if you have more questions or would like a further demonstration. We look forward to hearing from you.